Now, have you ever found a property that might be a little too rough for the average retail buyer, but it doesn't need a ton of work, and you've been able to find this property at such a deep discount, you just can't possibly pass up on this opportunity. You see the profitability in this deal, you might be sitting on the perfect wholetail deal, but how do you fund this property fast? How do you close on it quickly? Now, this is where bridge loans come in. So today I'm gonna break down what exactly wholetailing is, what the best loan product out there right now is for wholetailing investors, and that is a bridge loan. And I'm also gonna describe how the bridge loan product helps investors maximize profits with much less rehab and far less headaches. I'm Jeremy. I'm a certified mortgage advisor and real estate investor, and I help other investors, first-time homebuyers, and entrepreneurs qualify with smart financing products like DSCR loans, fix and flip loans, conventional lending options, and I also discuss creative financing strategies without fluff. So you can scale your portfolio, improve cash flow, and build wealth long-term through real estate. So let's define this first. What is wholetailing? A lot of people still confuse wholetailing with flipping or wholesaling. So let's break this down. So a wholetail deal, this is where you find a property. Now this could be a distressed property that's on or off market, but it could even be a property that is market ready, that doesn't need a whole lot of work, doesn't need a whole lot of repairs or a lot of attention. And you acquire funding to buy this property quickly. And then as soon as you close on this property, you're gonna turn around and put it right back on market to sell. So rather than just doing a full complete rehab or even a light, moderate, lipstick rehab, you might be cleaning it up or potentially removing some junk, getting some trash out of there, personal property and things like this. You might even do maybe a light paint job, or maybe there's really light remodeling work or landscaping work that doesn't require a whole lot of contractors and a whole lot of repair budget timelines. And then you're just gonna sell. You're gonna put it right on market and you're gonna sell that to a retail buyer. And sometimes this is a first-time home buyer, or it could even be another investor buyer that wants to buy this property for their portfolio to generate cash flow. Essentially, wholetailing is a blend, it's a hybrid of wholesaling and retail flipping, hence the name, wholetailing. Here's why investors are absolutely in love with this strategy right now in real estate. You have faster turnaround time than flips. That part seems obvious. Much less risk and oftentimes much less capital used. When you do put these homes back on market, you are exposing that property to the public. You're putting it on the MLS, which increases your buyer pool and gives you a lot more opportunities and reps to get potential pre-approved buyers in that property to purchase, and you still get the equity upside. If your underwriting is sound, you're still going to create a lot of profitability for a lot less work and a lot less hassle than going the full-blown retail flip route. Now, the key is you need fast funding that doesn't require a perfect condition of the home, even though the home might be in pretty good condition. It also does not require personal income. And this is exactly where bridge loans shine. Now, what is a bridge loan? Now, a bridge loan is a short-term financing product that helps you bridge the gap between acquiring a property and then exiting that property, whether it's through a traditional sale or whether it's through a refinance. Here's what makes it a little bit different. So first of all, speed. The funding for these types of deals can happen in as little as 5 to 10 days. Flexibility. So this does not require your personal income. You don't need to provide tax returns or W-2s. The funding approval is generally based on the asset itself, the asset's ability to generate an income by selling on market via profitability. This is a shorter term, so usually you're looking at 6 months or 12-month terms. Most options we have access to are 12 months. And lastly, there's interest-only payments involved. This is not an amortized loan, so you're going to be paying a slightly higher interest rate than what the market generally bears for conventional loans, but it is interest only, so that's going to be a little bit lower, which keeps your costs down during the holding period. So you can also think of it as transactional funding for serious investors. So I'll give you a wholetail scenario to walk you through A to Z how this process usually works. So a real scenario from a real client recently. We found an off-market deal. He found an off-market deal for $305,000 in Tennessee. Now, after a quick close and a quick cleanup of roughly $8,000 or $9,000, which they cash flowed, now that property's worth $400,000 on the market. So our bridge financing product would bring in 85% of the purchase price. So in this case, that number was about $259,000. So the investor client, they bring in roughly $45,000 to closing, plus the closing costs and the holding costs that are on standby. Listed it on market right away at $400,000 with the expectation that it's going to be under contract in about 2 weeks, give or take. Now, they're going to expect to sell this property completely in the first 60 to 90 days after closing on the purchase. And if they hit that target, they're going to expect anywhere in the range of about $55,000, maybe $50,000 to $55,000 net profit at closing. So they were able to skip the permits, skip the lengthy rehab schedules, managing a bunch of different trades, and they're still going to pull in a nice haul at closing, a nice profit figure by completing the project with bridge financing. Now, one point to note here is that this investor is experienced. He has a wealth of knowledge and experience in evaluating properties, the as-is value, and also the after repair value, even though there wasn't a whole lot of difference here with this specific deal. Now, not only has he been using this strategy for years, but he's also got other solid exit strategies in case the home does not sell in that first 2 to 3 month period. This property will cash flow. If it ends up not selling in his time frame and he doesn't hit his profit target that he wants to hit, he'll have flexibility. He can go ahead and refinance that Wholetail bridge loan into a long-term DSCR investment loan, put a tenant in that property for, let's say, a year. Then maybe he wants to try again a year down the road. Maybe that's 2 years, 3 years, 5 years down the road when he puts this property back on market. When the market is a little bit more stable or supports his exit price, he has so much flexibility there. The backup option kind of tags on to the DSCR refinance option, which is he might complete a refinance, and then after that transaction is completed, he's perfectly free to go ahead and sell that property on a wrap to a tenant buyer, which not only will lock in a price that is going to be met down the road when that loan is either paid off or refinanced, but he'll also experience a significant amount more cash flow per month than if he just went refinance that property into a DSCR loan and put a regular tenant in the property. Now, one last strategy with this particular deal that's important to note here is that this investor was able to bring in a private money partner to this transaction for gap or transactional lending. Now, the private money partner comes in, they brought in the $45,000 required to close on the property as a down payment. They're covering the closing costs, which are fairly minimal, and then they're also covering the holding costs. So, in the grand scheme of things, this investor is truly into this deal for zero. He has no skin in the game. Now, he's able to do this because he's got a wealth of experience in the space. He has many private lending and private money partner connections in the industry. They trust his business and how he works. And that can't be overstated. When you have the experience and the knowledge and you put those things together with a strong network, you can do things like leverage that are just amazing and insanely profitable for your business. This allows him to go out and grab 5, 10, 15 other transactions that are occurring at the same time as this deal to further maximize his profitability with very little skin in the game. So for him, wholetailing is something that he is very, very strong with. And the bridge financing product is the tool that he's using. Now, there's a couple of things about the bridge loan that you should take away from this video. One of them is the term length. So the term length is anywhere from 6 to 12 months. That is the amount of time you're going to have your interest-only payment and your interest-only loan with your Wholetail deal using a bridge loan. Now, the interest rate can vary here, but I've seen anywhere from as low as 8% from some private lenders all the way up to 15% for others. Some of the factors that play there include what your credit score looks like, how much experience you have in the space, and what your relationships are like with your current lenders. Now, as far as the dollar amount that the lender will approve you for, in other words, what money they're going to finance off of the purchase price, in this example, they're financing 85% of the purchase price, which is even more money than a traditional investment property purchase. And typically those purchases are 20% down. Now, there are a few 15% down options. If you want to learn more about those, check out my 15% down investment property purchase video. But for the most part, you're looking at 20% down. So this deal was amazing at 15% down. And again, he did not have to bring in the down payment himself. He had a private money partner do that for him. Now, something else a lot of lenders look at here and most investors overlook, the lender is going to lend a percentage of the purchase price. However, that number is going to be capped generally by what the estimated after repair value will be for that property. So a lot of lenders look at this number closely. They'll lend up to 75% of the value of the property. Now, some lenders are a little bit higher, some lenders are lower, but if the after repair value of the property is $400,000 or a little bit more, it's pretty reasonable that he can get financing for $300,000, right? 75% of $400,000 is about $300,000. So he's got that locked down. This is a great deal, and his underwriting works for this specific scenario. Now, I mentioned FICO score in terms of the interest rate and some of the points that you might pay for a bridge loan like this. So you want to make sure your credit score is at the 660 to 680 mark or higher. Once you're at 680 and you get lower than that figure, the terms start to get a little less attractive, and there might be more points that are charged. There might be a decrease in the amount of the loan that a lender will issue for you. So that could turn your 85% of the purchase loan into an 80% or even a 75% of the purchase, which requires much more capital up front, which obviously limits your scalability and your ability to go out and do this with other properties at the same time. So your credit score does matter here. For funding timelines, most of these transactions take place in 5 to 10 days. A lot of times investors are scrambling to find a lender that can make this happen quickly. If you budget 2 weeks for these sorts of bridge loans, you're usually going to be in a good spot, as long as you're prepared. I will tell you, bridge loans, they're built for speed and flexibility, but you need to know the numbers firmly going in. And you also want a great exit plan. So if your exit plan is to sell on market, that's great. What happens if it doesn't sell? You have to have a backup plan, and it also helps to have not just a plan B, but a plan C. And that leads me to when not to do a bridge loan for a wholesale purchase. And I think the number one thing is if you're not clear on your numbers and you feel like your underwriting is iffy, this would not be a good option for you. You need to have a clear exit strategy, and your numbers need to work. Another thing is if you're unsure on how it's going to sell, the method by which it's going to sell, or who your buyer avatar is going to be for that property, a bridge loan might not be a good fit for you. If you're not ready for short-term interest-only payments and a shorter term overall of 6 to 12 months, bridge might not be a great option. And if you feel like up front that this property might take a really long time to get sold, I would hesitate using a bridge product for this. These bridge loans are tools. It's not magic pixie dust. They're perfect for short, clean plays where you're in and you're out with very little work needed on the property, if any, not long-term holds. So if you're currently actively doing wholesale deals in your market, or you want to start doing wholesale deals, or if you're just kind of thinking about it, you want to discuss some of these strategies, you need to work with a lender that understands how these loans work. I help investors get loans just like this for really fast, really clean deals without the W-2s, without the tax returns, without extensive rehab estimates, with general contractor rehab budgets filled in line by line, dialed in. We don't need any of that for a bridge loan product. If you want to see if a bridge loan works for you and your next deal, just drop a comment below or shoot me a message. I'd be happy to chat with you about this. I can help you run the numbers. I can help you find the best fit. I could even put a second set of eyes on these deals as well, because I am a user as well as a distributor of bridge loan products. Hey, thanks so much for watching. I really appreciate you guys tuning in. Thank you so much. If you found some value in this video, please drop a like and comment below if you have questions about bridge loan products. I'd love to hear from you. I'll answer every question myself. And if you want to hear more investment related content, if you want to hear more about mortgage products and wealth creation in general, leveraging creative financing, subscribe. I'd love to have you along for the ride, and I'll see you in the next video.